So after the last video, I made a new account and ran a 2-month billing cycle on it, so we can just take a look at what a multi-month charge would look like. And here's the account that I set up, and you can see one small change already is that we have this graph on the dashboard under the billing section, and what this graph will do is every month when you bill, it'll show you what the total was of the bill as the height of the bar, and then it'll be colored to show you whether the invoice is unpaid, delinquent, or paid. So if it's fully green, it'll be paid off. If it's red, it's delinquent. And if it's yellow, it's due, not delinquent, but unpaid. And you'll be able to see as you bill on month over month, this graph will show up and you'll be able to see if your revenue on this account is increasing or decreasing, or if they have a lot of delinquency, or whatever the case may be. So let's jump over and take a look at the account transactions. If we go to the billing tab and transactions, you'll see we have one charge on here for Gold Internet. And you'll notice it's for $108.25, even though our service is only a $50 service. And if we go back to transactions, we can see this was billed for 2 months, and we have the tax added onto it, so we can quickly figure out why it's the amount it was. Now, I billed this account as of May 30th. If we look under the parameters, you'll see my next bill date is now July 1st. I've moved this back to a first of the month billing cycle, and I moved this back to 1 month to bill. But when I ran billing, we had this on a 2-month billing cycle, and we billed on the 30th. So if we take a look at our one transaction and then go to our invoice, you'll see our invoice has now been created, and there's a breakdown when we expand the invoice to show there's a $100 debit for Gold Internet. We have 2 different taxes. This was a 2-month invoice. It has a due date on it, and this is how much is remaining out of the total. So if I wanted to look at this as a PDF, I can come in here and I can download it. I can also email this to the customer. It will have been emailed to them automatically already, but if we needed to email it again or email it to a different contact, we could do that here as well as doing some minor changes to it, like adding a credit or voiding a credit or that kind of thing. So I'm going to move through a few different transactions on here and show you how they all interact. We're going to start by making a payment. We'll apply it to the invoice. We'll void it off the invoice and just take a look at those kinds of things. So let's jump back over to transactions, and let's imagine this customer mails in a check. So we're going to go and apply a payment. I'll say it's a check. The date on the check we can set to whatever date we want. It defaults to today. This would be the actual date on the check that as of when it was written, so I'll put that there. We can set a payment reference. This would be like a check number or wire transfer number or something like that. So I'm just going to put in 12345. And then again, we can say, is it for the total or is it for a specific amount? Well, let's say this was a $50 check. We'll put in 50. And I'm going to leave this on automatically apply to unpaid invoices, and we'll see what happens. So we now have a payment on the account for 50. If I expand that out, you can see there's $0 left on this payment to be used. The whole $50 has been applied to invoice ID 7. That happened because I left the automatically apply payment checkbox checked. If I didn't, then this would still have 50 remaining and we'd have to apply it manually. And here's my payment reference. If we go back over to the invoices and expand it, you see is now 58.25 due, 58.25 out of 108.25. We have a $50 credit applied here from that check that just came in. So let's say you applied that check and you accidentally left the automatically apply checkbox checked and you really wanted to apply it to a different invoice. If you click this trash can icon here, it'll show you which payment's being voided. You can also come in here and do void credit, and you'll be able to pick it down from a list. Hitting the trash can here will automatically select the one you clicked on. So I'm going to void that credit, and what that does is it voids the credit on the invoice and it returns the money onto our payment. So I now have $50 in available funds. If I go back to transactions and expand that check, we now see $0 is applied to 7 because the credit's voided, and we have $50 available again. So now if we go back to this invoice, if we really did want to apply it to this invoice, I would just do add credit, and I could either say the maximum up to $50 or a specific amount. I'll put $25 on there. Oh, I left maximum check. Let's fix that again. So let's void that one out, and we'll do add credit. We'll do 25. There we go. Okay, so now we have a $25 credit on there. We have $25 left in available funds. I can come back to this payment, See, 25's applied. We have 25 left. I could go and make another credit against the invoice for the remaining 25 if I wanted to, or we could void that one back off and then the money would be back in available funds. So generally you're probably just going to make a payment, let it apply to the invoice automatically, and it will go onto the oldest one on the account. But you can see here it's pretty easy to go backwards and forwards and add and remove credits from invoices based on payments. You can do the same thing with a discount. So let's say he paid $50, but we're going to credit back the remaining $58.25 because of a service issue or something. If you recall earlier on, we made that service credit adjustment service and we limited it to $200 every 30 days that could be applied per user. So I have $200 left of my credit, and I'm going to apply it to this customer for $58.25. Same deal here, we can automatically apply it to unpaid invoices. I'm going to let that happen. We now have a discount on the account, so functionally a discount and a payment work in the same way in terms of paying off invoices. One comes from money, one comes from you giving a discount to the customer. They're going to differ in terms of financial reporting, but in terms of looking at the invoice, what we'll see if we go there is there's a credit for $58.25 and it's reduced the due balance on the invoice by that amount. So let's go ahead and add a $50 check back on there, and we now have a zero invoice. Okay, so if we go back into transactions and take a look at what we have here now, we have a single debit for $108.25, payment for $50, and a payment for $58.25. So that's zeroed out our account. We now have a balance due of zero. We have no available funds. And if I go to the dashboard, this is all green. And you now see this gray part behind it. What will happen with invoices is this gray part will increase as payments are made. So if we only had a partial payment on this invoice, let's go back and void out one of those credits again. And then we look at that dashboard, you'll see it shows that we've paid $50 out of $108.25. So the gray part is at the $50 line, and the yellow part's up at the $108.25 line. And again, we can come back in here, add the credit again, and we'll see the dashboard update. Now, one thing to note here is even though we're removing those credits, they still show up in the list as voided. And one of the things we do in Sonar is we store a whole history of everything financial that ever happens. And generally you're not going to see a large quantity of voided credits on here and other ones added back. It's going to be a sort of one-time thing to fix an error. But just bear in mind that you do see that here. And you also see on these payments all these $0 applications that are going to show you it was at one point used to credit off an invoice. So this always gives you a way to look at everything that's happened on the account and see what's going on there. So let's talk about handling transactions themselves a little bit now. Let's say really what happened was we billed this guy $108.25, but that wasn't supposed to happen. He was only supposed to have been billed for 1 month, and we accidentally billed for 2 months. So let's reconcile this account. So first, I'm going to get rid of these credits on here. We don't really want to have applied payments to this invoice if it's not valid, so I'm just going to go ahead and void those off. So now we have a due balance on here of $108.25. Now, because this was an automatic billing invoice, we can't just delete it. In Sonar, we got to maintain that history. Everything that happens is stored historically so that we can see if somebody calls in now later and says, oh yeah, I was accidentally billed 2 months, I shouldn't have been. There is a history of that on here. It hasn't just disappeared. And a quick way to deal with this is there's two options. We could come in here now and we could void the invoice. And what that will do is it's going to automate the steps of voiding off the credits and reversing all the debits. But I'm actually going to step you through this. Since this is a pretty simple invoice, we only have one debit on it, I'm going to step you through how we would manually do this rather than relying on the void option here. So if we go to transactions and you see this debit here, this is the debit we used to create the invoice when billing ran. So if we expand this invoice, here's our debit, May 30th, 1253. Come back over here, May 30th, 1253, right? So if we go to the menu here and do reverse, what happens when you reverse an invoice debit is it's going to mark it as reversed, and it'll create a corresponding discount for the same amount and automatically apply it to the invoice the debit was on. So what's now happened is this invoice shows paid because it's zeroed out, but really what's happened is we've charged $108.25 and then we've reversed that transaction and created a $108.25 discount. Now this doesn't matter a great deal in this scenario because we're doing this on the same day within a few minutes of each other, but imagine a more complex setup where we'd build them for 2 months and you didn't realize right away and you've booked that revenue and you've closed your books, and then a week later the customer calls and says, why was I billed for 2 months? Going through it in this way will help you resolve that situation because you can leave the revenue in that previous billing cycle and you can reduce your revenue now by an equivalent amount, and all your financial reports are going to reflect accurately, and all we had to do was just reverse that one transaction there. So when we're dealing with things that you're doing in the same day, when we're not talking about a closed period, there are ways to remove things from here altogether, and I'm going to show you how that works. So let's just add a one-time transaction, and I'm just going to pick any one of these debits. Let's just pick this gold internet. I'm going to add it to the account, and I'm going to create an invoice, and I'm going to use that debit. We've got that one debit checked here at the top. I'm going to uncheck automatically apply funds. I don't want to do that right now. Just want to create an invoice that's due. So here's our new invoice, $50 due on it from the $50 transaction we just generated. Now if I just come in here and reverse this transaction, it's going to do the same thing we just saw a minute ago, where it's created a corresponding discount and it's applied it to that invoice, so now the debit and the credit cancel out. However, what we could have done is if we insert that charge again and I create an invoice again, when an accounting period is unclosed, and let me void off that credit, I forgot to uncheck automatically apply. Okay, so we have a $50 invoice. When an accounting period is unclosed, and when I talk about an unclosed accounting period, if we go to financial, billing, and an accounting period, you'll see by default the system closes the accounting period every day, which means it's going to lock down transactions on a daily basis. I can uncheck this and close my period manually if I really only do my accounting on a weekly or monthly or quarterly basis or whatever, but just bear in mind this is here. And let's go back to our account again. So when we close our period on an accounting basis, before it's closed, there are some things we can do to remove transactions where we've made a mistake and we catch it right away. Now, in this case, because I've made an invoice with this transaction, if I come back and reverse this debit, it's going to do what we just saw, where it creates a reversal and pays off the invoice, and that's because an invoice already exists. But because I only just created this invoice and our accounting period hasn't closed yet, I can come in and delete it. And what it does when I delete the invoice is it then leaves this debit now uninvoiced, and if I reverse an uninvoiced debit, it's going to remove it from the account altogether. And the reason it does that is because it's not invoiced, it's not going to be booked as revenue yet. We don't show in any of the accrual type reports in here uninvoiced debits. We're only going to show invoiced debits. So because it's uninvoiced, it's not booked in revenue, we're able to reverse it and it gets removed from the account. So if you make a mistake and you catch it right away, you are able to clean up by removing an invoice that you've created by mistake or that kind of thing, and then reversing a debit. The other things we can reverse are discounts and payments. And when you reverse a payment, depending on the type of payment it is, it's going to dictate how that's treated. So for example, with a check, if I reverse a check, it's going to remove the amount of that check from available funds if it was sitting there. And if it's been applied to any invoices, it'll void out the credits from those invoices as well. In this case, I hadn't applied this payment to any invoices, it was sitting in available funds, so all it's done is reduce my available funds. However, let's add a credit card onto this account and take a look at how that's handled differently. So I now have a credit card on my account. I'm going to go back to transactions, make a payment, pick the credit card, and let's make a $10 payment. When we're using a payment method that goes through a payment processor, when I reverse the payment, there's also an option here to refund it via the payment provider. So what it would do in this case is exactly the same thing as we had with the check. It's going to remove it from available funds and void any credits, but if I leave this checked, it's also going to go to IPPay or whoever my payment processor is and send that $10 back onto the customer's card. So it's very important to bear in mind the differences here. With these manual type of payments like cash or check, if you reverse it and you need to refund it to the customer, you're going to have to handle that manually. We don't have a way of taking cash out of your drawer and mailing it to the customer. But if you do it with a credit card or e-check or ACH, then when you refund it, you'll always have that option, or when you reverse it, sorry, you'll always have that option to refund it. And if you select that, we're going to use the payment processor or the ACH batching system to give that money back as well.